Stop trading gold, stop trading US 30 if you trade a smaller account. This is one of the biggest reasons why a lot of traders fail their account, because US 30 and gold has a lot more volatility and a lot of traders want to make money quick. But this is why I'm doing this video, because there are actually 3 Forex pairs you can trade that is a lot more quiet, a lot more cleaner, and is not as volatile, but I promise you the structure is so well, your win rate will be extremely high. And these are pairs that nobody's really talking about because it's not the flashy ones like your gold, NASDAQ, or US 30. This is really something calm and collect, but they move when they move if you trade them right. So that's exactly what we're going to be doing in this video. I'm just going to get straight to it. Make sure you like, comment, and subscribe. Let's get to it. All right, so the first one is going to be smooth operator, CAD yen. Actually, I have a student now. He is banking off of this one, and I'm gonna explain why. The psychology behind CAD yen is it moves like a sniper with a suppressor. No flashiness, no fake outs, clean, smooth transactions. It basically collects really good setups. It respects fibs very well, also reacts to session zones and gives snipers textbook structure with low stress. So I'm going to show you how to trade this. I'm going to also break it down in a chart so you can see it. And then we're going to move into my second favorite, which is really my first favorite of them all. And then the last one is going to be my favorite to choose when it comes to trading any Forex pairs. All right, so how to trade it is, first we have to look at the session timing. London Open, 3 a.m. to 5 a.m. Eastern time is where the magic happens. And then from New York session, 8 a.m. to 10 a.m. Eastern times can work too. But London is where the setup is really the cleanest for this one. Now for the trigger, basically the entry is we're going to wait for a liquidity sweep either during the Tokyo lows or the Tokyo highs. This pair loves to bait traders just before it pulls back into the equilibrium level. For those that don't know what equilibrium level, it is basically 50% of a high in the low, which is what I like to call the actual range. So therefore, that is what I'm referring to when I say equilibrium. Now, the confirmation, you want to wait after the sweep. Look for price to pull back into the 50, the 618, and we're going to also use a magic Fibonacci level, which is going to be the 0.44%, and I'll show you guys in the charts, fib zone from the recent move. And then entry will come 1 or 5 minute engulfing candle, depending on the time frame you want, and then or rejection wick inside the zone. Now, as far as the confluences, must align with a session box. London prefers. So I'm going to show you guys the indicator that you can use to help you with the sessions. And then you look for a clear market structure break before the fibs pull back. And then one of the bonuses to give you more confluence is you want to enter based off of the candle, either closing above or below a minor zone or a supply or demand flip. Exit model, this is kind of like the risk model. You always go for 1 or 2. I'm gonna explain that in a little bit. And then you also want to try to line your 1 or 2 with the fib extension, which is the -27 and -618. Let me show you guys how this will look in a chart so you can really see this in a visual aspect. So I just opened up Trade with Solo with an option for you guys to join literally for free. And how it works is you have to go with our option A, but signing up through our broker that we use. This gives you the ability to trade with me live when we go live. Also gives you the ability to use the exact scalping strategies and the exact playbook that I use consistently to pay myself out, withdrawals, and so forth. But you have to use the broker that we're using, so we all would be on the same page when we're growing these accounts and also just compounding and building and scaling our account. How it works is you would just have to sign up, deposit at least $25 into the account, go for $500 just because you do get a 100% sign-on bonus, and it gives you way much more leverage to trade with us for sure, and also scale your account on your own after watching all of the videos that we posted in our community. So go to tradewithsolo.com, get in tune, learn how to grow, learn how to stay consistent, and start making profits with us, and start making profits even by yourself at tradewithsolo.com. Let's get back to it. All right, guys, so as you see, this is a setup that I want to show you how to look at this when you're trading. On here, we have the color blocks. This is the sessions that I was saying earlier. How you get this is up top. You can't see it on the screen, but you will go ahead and click indicators. And when you click indicators, all you're going to do is type in sessions. And you're going to get this particular one that I have started, which is by JRFX. And then once you get that, this is pretty much what it looks like. Now, if your settings, I don't know if it might be off, it could be off, just go ahead ahead and pause this video and you can just go ahead and copy these settings here. Now, after you have that, this is pretty much where you will want to now start to look at different sessions. So like I said earlier, you have Tokyo session. So Tokyo session, all you're going to do is mark out the highest point during Tokyo session and then the lowest point during Tokyo session. And then all you're going to wait for market to do is sweep liquidity. Essentially what it does is it will either go one direction where it takes out the liquidity, and after it takes out the liquidity, it will usually pull back. And that pullback is what we're going to actually use to catch this play. Now here's where it gets a little tricky because I have to show you guys how to find a range, which is the actual most recent trend. A lot of times traders, when trading, is looking at like the bigger picture. That is not what you're doing as a scalper or somebody even trying to scale a small account. You really want to pay attention to true price action volume, like what is happening now with price action, because the problem is going off of a 1 hour or going off of 4 hour, when you see the volume, which is really, like I said, the trend is down. Obviously, yes, we see that the market overall is a downtrend. But what do we do in a situation when the market is in a internal uptrend? We need to pay attention to internal structure. And that is why we have to pay attention to what is happening right here. So one way that you want to look at structure and the way of internal structure is paying attention to every move that goes right up and every move that comes down, every move that goes up and every move that comes down, every move that goes up, every move that comes down. This is the importance of knowing what is the most recent trend, because every time the market goes up and the market comes down, that is a new trend. Even though this is a bigger trend, if I was on a 1 hour scale and if I was just to see it on a 1 hour, 4 hour, it would look just like this. So you won't even know internal structure what's happening. But inside of a smaller time frame, like a 15-minute time frame, it is very important for you to look at these little plays. This point, which we like to call our A point, and then the B point, which is the last point. These are the moves that I want you guys to pay attention to, because these are the moves where you're going to be drawing your Fibonacci. And if not drawing a Fibonacci, these are the moves that you want to see pricing reacting to previous structure. So this is where you want to see your fair value gaps hitting, your order blocks, your supply and demand levels. You're not looking for those levels down here because you marked it on a 1 hour. It will get there eventually, but right now your focus is beating the internal structure first. So if we go back here and we look at what's happening, the best advice I can give any trader is pay attention to the most recent internal structure first, and then your second structure is pay attention to the second internal structure. So what I mean by that is if I was to draw out a line, this is our most recent internal structure right here. And the reason why I marked that out is simply because this is where the leg started, which we call our trend. This is where the price action volume had happened. And then this is where it ended. How was I able to find this right here and establish how did it end? By drawing out this line right here, I'm able to see that the moment we break structure, internal structure, this now becomes my B point. So now I'm going to draw my fibs from this point to this point. Now, as far as the second internal structure, that would be down here to here. And you also have to pay attention to that sometimes as well. So we're going to look at it. We're going to say that draw out our fibs from this A point to this B point, and then anything below the 50% we're interested in. So as you guys see, I have a level called 44%, which once again, this is my fib retracement settings. Pause the video. But this is anything below this, I'm looking for structure. This could be anything from a fair value gap, an order block, or institutional levels. If you look right here, we have a gap in between two candles, which is this candle, and this marks my fair value gap. So I'm not interested in any of these down here, unless if I was to draw my fibs from this point to this point, which I just took it from this to this, anything below I'm interested in. As you see, this fair value gap still aligns below my 44. And in addition to that, we have a lot of supply demand down here as well. So this would have been another trigger point. How this strategy works is simply once market taps into this level, you will then now head on a 5-minute and or 1 minute time frame after establishing off the 15-minute time frame what is going on. So if we were to go back, now I copied and pasted over the confirmation. So we basically want to wait after liquidity sweeps, look for the price to pull 50% 618 from the fibs. We already established that by finding that fair value gap on the 15-minute. Then now from either the 1 minute or the 5-minute, we look for engulfing candle or wick rejections inside that zone, wick rejections inside this zone. And then we also got engulfing candle right here, and it closed above the 9 EMA. I am going to now go ahead and long this position. I'm going to, since I already know that the market had broke all and did everything it needed to do for establishing true liquidity volume, I don't need to put my stop loss all the way down here, because it already did its part. It already grabbed liquidity, already took all of the orders out. I just need to ride it to a simple 1 to 2. And this 1 to 2 trade could be something basic like this. So if we play this one out, let me just go ahead and fast forward it. As you see, that was the most quickest 5-minute scalp move ever. And that is a simple play that you guys can do when it comes to trading this one. Now, this is not really with a real bag. I'm gonna show you guys how to really make a lot of money with the next one. So let's get to it. All right, so the next one is going to be the invincible flipper, which is GBP Chief, which is so unusual to a trader's eye. But GBP Chief is a pair that nobody flexes obviously at all with, and that is the secret weapon right there. It's overlooked, it's low key, and it's perfect for catching stop hunts. When I show you guys what this looks like, you're going to be like, what the fuck? But this is where you get the bag, because it does a lot of stop hunting. And this is how you can catch these spikes. It doesn't spike like GBP yen, but when it moves the right way. Like I said, you're catching stop hunts, which is once again these crazy spikes that you're going to see a lot. So how we're trading this is we're going to be trading this best during Frankfurt, which is the into London early 2 a.m. to 5 a.m. Eastern time. This is when liquidity builds, and it's just before major volume hits, given the clean traps and reversals. The trigger, all we're going to do is basically look for liquidity sweeps above or below the Asian session. This is important. This is how we catch a lot of these FX moves. And then it loves to fake a breakout, reverse hard, and falls back into a range. I realize that happens a lot with this one. Confirmation is we're going to wait for the wick rejection candles off the 1 or 5 minute, ideally forming inside of the 50 and 618. And then the confluences that we're going to be looking at is we're going to be using volume spikes after the sweep. As a confirmation, check for session imbalances or any EQ zones in the background. That's important. And then also the Asian range breaks to immediate rejection gives us also the green light. And we're also going to be catching a 1 to 2 as well with the Fibonacci levels as well. So let's talk about how this looks in the chart. So this is an easy one to trade, very easy one to trade. And I'm going to show you real quick how this one works. So you want to look at the Tokyo highs and lows, mark those out before, literally, like I said early, like the early, you got to be on this one, guys. It's going to literally sweep liquidity so quick, you might miss it. Like I'm talking 5 minutes, 15 minutes sometimes. But as you see right here, we had that sweep of liquidity and then boom, it went the other way. Now, if you get really good at this, and that's what I'm here for, when you're looking at Tokyo session, you want to look at the most recent range, just literally about an hour before it actually closes. You want to draw out your fibs from that most recent range, which we're looking at this point to this point. And then always the market tends to hit our -27 to -618, which is like I call our P and H level or P and L level. In this instance, this is potential new high. It always likes to sweep the liquidity and grab it from here. And then if you look out on a higher scale, we're going off the 1 hour now. It always aligns with some sort of structural strategy, like a fair value gap, an order block, supply demand, a liquidity zone trap. And as you see, that's pretty much kind of what we have here, as it really was within here, but we also have some reactions here. And that's really cool to know, because for those that's like waiting on it to come here because they see that, oh, this is my fair value gap area, and they're like waiting on it to tap here and it never does, you can be very accurate just by doing this, and you don't even need to do the extra work. So now if we go back to the 5 minute, let's go ahead and go back. So now going back into the 15-minute time frame, once the market sweeps and grabs that basic liquidity, we are now going to start looking for our entry. And then the way we look for the entry, like I said, you got to be on it. You want to get in on a 5 minute time frame when market shows you that the sellers are actually strong in the market. It's obviously going to sweep the liquidity. That's number one. Next important thing is looking at volume. That's why I say engulfing candles is the easiest way to look at volume. Once you get that, we're now going to go ahead and let's say we're shorting this position. I'm literally going to put my stop. You can do two ways to put your stops. You can put your stops either above the candle, or you can take it above the next candle, which is here. We're going to go ahead and go for this one, and we're just going to go for a simple 1 to 2 trade. Let me pause this real quick. Get that. And as you see, it's like it's hitting it. It's not. It's taking its time. And as you see, market tap that. I like to keep my stop losses really tight because I'm just like, look, if I lose it, I lose it. If I don't, let's keep going. And then eventually took almost like the whole London session. Now let me show you the other example here. So it's the same setup here. if we look at this move right here, we have the exact same range. If I draw it, I'm looking at the most recent range, guys, which is technically either this from here or also here to here, but we're going to draw it from here to here. Notice that market tapped into these areas perfectly. And if we look left, oh, wow, look at that. There's liquidity right there. And that's the reason why that happened. But it aligned with the Fibonacci very well. So then now, since we're looking for that liquidity sweep, we come back into London open. Either if you want to get in earlier, you can. But like I said, you want to get in during London. You want to catch this at the right time, guys. Timing is everything when it comes to this pair. If you catch it here, yes, this would have been your 1 to 2 trade played out right there. The other opportunity would have been this candle right here. But unfortunately, if you took this candle, you would have actually lost this because my stop loss would have been here. Not nowhere. And even if I moved it out, it wouldn't be here. So execution is everything when it comes to this. If you guys really want something really quick. And then now the last one, we're going to actually go into oil. I know this is not a Forex pair, but I promise you, if you know how to really trade this, you can make a lot of money. And I'm going to show you how. So with oil, it is a simple play that I look for. And it's one of my best forms of strategies that I have called the 3-man standing strategy. One thing I do is from a 1 hour time frame, which is this right here, I am looking to see if the market is either downtrend or uptrend. We clearly see the market is going down currently in the moment. And I'm only focusing in this particular moment, not looking at the overall aspect. Because if you were to look at the overall aspect, you might have said this is an uptrend. But right in the moment, we're going down. So now that I established that, I then simply hit on a 15-minute time frame and sometimes stay on a 1 hour, and I start looking for major wick rejections. So we're going to pay attention to this trade here because this is the trade that actually made me, as you see guys right here, this trade literally made me about in profit. We probably made a total of $2,000. We originally traded and lost it, and then we got back in and ended up making profit. But what ended up happening was market decided to drop. And the moment that market dropped, I seen this area as liquidity that needed to be grabbed, which because we had this wick here and we had this wick here. Now, a lot of times traders don't understand true liquidity because the thing is what happened next was we got this huge displacement candle. So yes, I instantly thought, well, if we were to enter off of this candle, which was a 5-minute entry, not 15-minute, which we're on the 15-minute, I would have thought that yes, the market would be ready to drop. But unfortunately, it wasn't just yet. And the reason is because we had market come right back to this liquidity again. If I was to go on a 5-minute time frame, I decided to enter off of this candle once we had got that close off of this play right here, which is coming into this liquidity magnet pool. And then we came back and then we had got major engulfing candles closing below the 9 EMA. I then now had to get in this trade with a super tight stop loss, which is above this candle right here, pips away. And then we went for a 1 to 3. It says 1 to 4, but we went for a simple 1 to 3 play. So with this one, I always like to look for liquidity sweeps. And when I get the liquidity sweep, I'll take the market and I always go for 1 to 3. And that always tends to work best for me as I use oil to trade and grow all my accounts. So now at this time, if you feel like you're still confused and lost, you can always subscribe to my YouTube channel. However, you can tap into Trade with Solo, which is where we go live. And also I show you more breakdowns in depth of all my strategies and also in depth of all these other strategies like platinum or like Forex pairs or like oil, how to actually trade it and be consistent and profitable. So if you are interested, you can actually join for free with option A, which is option A is saying you are able to join with the broker that we are all using to trade together. All you have to do is deposit at least $25. But if you want to deposit more, you can because you do get a 100% sign-on bonus. So the more, the better. $100 to another $100, you got $200 account. But $1,000 will get you $2,000 account. And that is going to help you scale your account with us at Trade with Solo. So if you want to check it out, tradewithsolo.com. Other than that, I appreciate you guys. I'll see you in my next video. Peace.